we buy or sell the Dash crypto? First off, read this disclaimer carefully. Here is their website, your money, your way. Ready to start making everyday purchases with digital cash? Dash Direct makes it fast and easy with savings every time you spend. Yeah, this is the type of approach to cryptos that I really like, where they actually are used as currencies. Here are the weekly data points for Dash slash the US dollar. We are at a very low level. You could definitively make the case, and I would make that case, that this is a long-term support level slash resistance. It's also a resistance level because we are emerging from being below the prior support, so it's now is resistance as well. So it's a bit of a glass half full versus glass half empty thing here. And what I do like is that the purple 20-week moving average was resistance and peekaboo. This week we are above it. Are we closing above it? We will know that on Sunday, but we are peaking above it here. Looking at the daily data points, we are doing something ambitious. We are testing the red 200 daily moving average, and that's a moving average that's used by a lot of algorithms out there. It's a very big deal. It is a declining moving average, so over time it should be easier and easier for us to close above it. If we fail at this declining moving average now, that certainly is a sign of weakness. It should not be a big problem to get above it. We are very, very far away from the all-time highs for Dash, so there should be bulls that take advantage of this opportunity. Looking at RSI, we are not at danger levels yet on the weeklies or the PPOs. On the dailies, we are at a level that triggered this pullback back here. You see the same RSI level, and also the pullback here during this rally where we had a bit of a peekaboo above the blue 100 daily moving average. We did pull back, and that became a bit bad for the bulls. As such, we are at a bit of a dangerous level, but then again, we are at a very low historical level here for Dash, so they should be able to pull this off. DMA resistance, that is the #1 event at the moment. Okay, let me give the bears a 2. So in many other contexts where we are at 200 daily moving average resistance, I would be giving the bears a much bigger score. But this is a declining moving average. It's going to be easier and easier to get above it unless we have a major, just complete implosion of the cryptos. The bulls should be able to pull this off, but to be perfectly clear, this is a bearish level. It is resistance. In the bigger picture, we did have major horizontal resistance as well. Let's have a bit of a look here at the seasonality. To the right, we have the average performance over the last 5 years. In green, 7 years in blue, 10 years in red. You usually see some bullish action into mid-December, but then we usually just give it all back. To the right here, December going back to 2018 has not been a bullish month at all. Last year, minus 26% in December. That's not bullish at all. Okay. I will give the bears a -7 here on the seasonality. The data we have here is simply not. Yeah, it's not really something you want to see. Let's some fundamental analysis of cryptos. Let's look at Dash here, of course. So in this case, you could make a pretty decent case that we are at a bit of a volume shelf. To some extent, you could argue that volume is an indicator for fundamental analysis. Looking here at this other indicator here, this is the mining cash flow line. You see that it is on the... So the cost of mining, it has gone up, but it's stabilized a bit. Here you have Another to the bottom here, a bit of a fundamental indicator that looks at mining costs. Got a bit of a buy rating back here. If we look at some of the previous signals, here you got capitulation, which was a contrarian bullish indicator. Here you got this, buy signal here, which was pretty bad timing. So indicator is a bit messy. I guess you could argue that the fundamentals are they're a bit bearish. Let's look at relative performance. We do have long-term weekly data points, 48% positive correlation with the S&P 500, 78% with Bitcoin, and 60% with Ethereum. Looking at daily data points, we have 58% with S&P 500, 87% with Bitcoin, and Ethereum is at 79% positive. Strongest correlation, that is with Bitcoin, which is the OG cryptocurrency. We have some rally the last 3 weeks. We are a bit on the rise, but yeah, the bulls are very, very, very cautious. Here are the daily data points. We have broken out above various, shorter term moving averages, the 5, 10, and the 20-day moving average. But there's not a whole lot of gustos from the bulls. Looking here to the left, the seasonality here for December. So we see that usually we see some on average strength here into December, but when we actually look here to the right and look at the data back to 2018, December is not a bullish month. It is not savagely bearish either, but it's clearly not bullish, which is a bit of an issue for us because we are in December. Here is a dash against the US. Here we have dash against Bitcoin. We are at a very low level in this pair. We do see that there's been some outperformance from Dash recently, but looking at RSI, it's a bit in a dangerous territory because back in May we failed at this level. Back here in January of 2020, we also failed at this exact level. Looking at seasonality, it is not good for December or January. As of late, 2020 was a bit of an exception, but not bullish. Yeah. The data here is simply not good. Minus 4.5 to the bears. We are at 200 daily moving average resistance. That's a big deal resistance level. We are emerging from a very low level. It's just that the seasonality is not that good. The mining costs are high. Versus Bitcoin, it didn't look that good either. So it's not really a good time for a dash. But if we are able to get above that 200 daily moving average and use it as a support level, then psychologically it's going to be beneficial. It's just that there's other factors now that are not helping, and the data is what it is. So we have time left, so let's look at some stocks that are interesting, in my opinion. Virgin Galactic Holdings is a stock I keep going back to, looking for opportunities. Here on the dailies, we do have a bit of a rounding bottom formation. Let me just draw that in. A bit of a rounding bottom. That's bullish. It's not a roaringly bullish move, but it's something. It's something we haven't seen in some time for Virgin. Here is the seasonality. December here, going back to 2018, it's not a bullish month, but it's not roaringly bearish either. January is a bit better. Now looking at the fundamentals here. Price book is low, price sales is low, a bunch of stuff is low. Let's have a bit of a look here at what the analysts are projecting for the coming year for Virgin Galactic. So we have 11 analysts with a 1-year price target, and the average target is 13% above us. So that's interesting. Let's look at Curiosity Stream. Also a stock that's been in a massive downtrend, but it's now forming a bit of a rounding bottom. What I don't like here, technically, is that we are now below all of these short-term moving averages. Well, almost all. So the 10-day moving average here in this pinkish color is also a resistance level. That's pretty weak. One would expect more from Curiosity Stream. December, it can be bullish. Let's look here at the fundamentals. We are pretty low here on various fundamental metrics, but not price. Price earnings has been lower. Now let's look at what the price targets are for Curiosity Stream. So 5 analysts are covering the stock, and we do have an average 208% upside price target. That's pretty good, I must say. Let's look at some of the meme stocks. Here's GameStop Corporation. Seems to have found a bit of a level of support. If I were to guess, this is a volume shelf. Let's have a bit of a look. It's a bit of a volume shelf. Not, yeah, to an extent, yeah. Yeah, it's a volume shelf, but not, I expected it to be a bit of a bigger volume shelf. Oh, yeah, than this, but looking at the daily data points, we do have a consolidation pattern. We are flirting a bit of breakout. I'm pretty sure we're not overbought on the dailies or the weeklies, I guess. No, not on the weeklies either. Here's the seasonality for GameStop, looking pretty bad here to the left. To the right here, we do see that December is a pretty weak month. That's not good. January is just atrocious. Oh, that's a very bad seasonality. Here you can see some of the fundamental metrics, rather low across the board. Let's now look at what the professional analysts are projecting for the coming year. Here are the forecasts. A whopping 3 analysts are covering the stock. Ooh, with an average minus 55% price target. Ooh, that's not good. Yeah, so this is not looking that healthy. What about AMC, another of those top meme stocks? A bunch of resistance levels. The purple 20-week moving average, red 200-week, green 50-week. Bad. Daily data points. Resistance from 100 daily moving average, 200 daily moving average, with a surgical resistance level here on the 1st of December. Let's look a bit at RSI and PPO. Are we overbought? Not overbought yet, so that's interesting. So maybe the bulls can try a bit more. Let's look at some of these other data. Seasonality is atrocious. That's not good. Fundamentals. I mean, the PE is certainly are not overvalued on PE. Price to sales is low. Price book, it actually isn't that low though. Price book. So let's look here at the analyst price targets. So here are the price targets. The average price target is 67% below us. That is not bullish. Okay, we looked at Dash. Things are looking problematic for cryptos. We also looked at the big boy Bitcoin, and it is sort of languishing. It doesn't really know what to do. It's showing some bullish action, but there's a cluster of resistance levels above us. And there is definitively concern that other shoes are about to drop because of the laissez-faire attitude in the crypto market. We have something that is a bit similar to the pre-central banking regime. In those times in the banking sector, you had banks that were very innovative and very experimental, and quite a few of those banks, they went belly up. They had experiments ongoing that sounded really cool, fresh, innovative, but when things became a bit rocky, they simply had no money to cover the demands for transaction, for withdrawals. That is the big concern here in the crypto market. So, and if we need like a central bank for cryptos, even if it is made by the crypto community, then it sort of defeats the purpose. But we do see the same issue, that there is actually a reason why we have central banks. Banking is extremely complicated. There's so many variables, and the big risk now with cryptos is that there are variables out there that we do not fully understand. The complexity is just too high, and if there is decay now that hasn't really seeped up yet, and that we can just get a bit of a whiff of it, um, that's not good. So I am definitively very concerned about cryptos. I hope it will work out without us needing like a central bank for cryptos. But I do think there's an atmosphere now that I am a bit uncomfortable with, and I think the coming times will be pretty exciting.